Investor FOMO is real, and this is going to benefit Bitcoin and eventually cryptocurrencies. It is all in the chart. The chart is going ballistic, setting new daily high prices, new daily highest closing prices for 2023 and beyond 400 days of data. That's what we're going to look at in today's video, looking at the FOMO that has set into the markets, causing price gaps. What does this mean? Can we expect a massive pullback? Is this part of the end? What is coming up next? Some great comments from you guys in the comment section on yesterday's video. So make sure you do hit that subscribe and like button and join us for more of the conversation here on the channel, as we are the home of macro cycle analysis, covering the stocks, covering cryptos, covering Bitcoin and the real estate cycle, everything your holistic investor here, because we study the past to forecast the future. Now, a couple of little things here. Top of the video description is our free TIA trading guides and reports. This is coming out in 24 hours time, and there is also a special on TradingView, which I'll get to later in the video. All right, let's start with the SP 500. The SP 500 has been going crazy over the last several weeks. You guys may have remembered from those breakout points, at least in early May, now 2 months ago, we are 10% higher than those prices. Yet there are still a lot of people sitting on the sidelines hoping and waiting for a pullback. The chart again is saying you're not going to get that significant pullback, at least for now. There might be some short-term pullbacks, some smaller pullbacks, which have occurred just a week and a half ago of 2.7%, closing in some of the gaps. And the gaps are being caused by the FOMO, the fear of missing out from investors or fund managers or retail investors or everyone combined, because they think they have missed out on the bottoms here. While the news was extremely bearish, you saw it here on the channel, we were throwing shade at the banking crisis collapse. Not for the people who have lost money, but as investors. You know, this is what we've been doing for over 15 years, reminding ourselves what the past has told us. Every time we get a significant news event like that, it has been a very good time to buy in this bull market. Now, there will come a time where it gets a little more difficult than that, but for now, let's stick with what the chart is telling us. We had inflation fears and interest rate hike fears and all of these opportunities to be buying the dip, but the news has been extremely bearish. It has been telling us the world needs to collapse and the markets need to collapse, and everyone's been telling us they need to collapse, yet the breakout has occurred, and this is fueling those gaps in the market, because now those fund managers who had their money on the sideline, those retail investors who had their money on the sideline, everyone who has had their money on the sideline is starting to feel that crunch. They're feeling like they've missed out. And yes, I understand this can get a little bit crazy and it might not be the best time to be getting into the market. And of course, that's not what I'm here to do. I'm not here to tell you to buy or sell. I'm just telling you those times in the market that are good buying opportunities around those lows and when it starts to get a little bit crazy. And now are those times where it starts to get a little bit crazy. But of course, if we're setting positions at these lower prices, this is the easy part. Now we just have to hold on and look at what's going on in the market. So we're seeing that now. We're seeing gaps. We're seeing highest prices. We haven't had a highest price like this since April of 2022. So over 400 days ago. This is the highest prices since that point. And we've seen the highest closing price in 2023 yet again. You've probably heard me say that many times in 2023, because that's basically what has been happening. So this, of course, is fueling those gaps. And I just want to have a look at what happens with the gaps in the market. When we start to see these gaps form in the market from those low points or some of those breakout points, often, not always, they go on and on and on, and you don't see a the price come back to fill in those gaps. So this is important, because if we start to see those gaps, the FOMO can get even more real and the price keeps going up while everyone is saying we need a pullback. This period that I'm showing you here is 2020. Remember the pandemic, remember the collapse, remember when everyone's locked down and everything was coming to an end. The world was coming to an end. I'm trying to build that up because honestly, that's the biggest thing I've ever felt in my life when it comes to the markets, that the world had to basically collapse and we had to restart again. We had to build. It didn't happen. And we got gaps upon gaps upon gaps and gaps. Some of them were filled, but some of them were not, like we had back at these areas here. Some little prices through there, some of them weren't filled. These weren't filled back here. This wasn't filled here from the bottom of the market. So when that starts to happen, things can get a little bit crazy. And that's pretty much all I want to say to you about these gaps. As you can see through this period, September, October, if you remember, maybe some of us don't, this was that second wave that was supposed to come. And sure, it came and some were affected by it. So we're not having a go at your stance on whatever happened with the pandemic, that sort of stuff. We're purely investors looking at the chart, understanding what the emotion was at the time, and then reading it, what was happening in the chart, what people were actually buying or selling at that time. And they were not selling. They were buying, and they were buying each of these dips. You can see the price getting higher and higher. There's a little gap, there's a little gap, there's another little gap, and the price continues up, up, and away. And we ended up getting the peak at January 2022. Now, the gaps can happen to the downside as well, and they did happen in 2022, and eventually all these gaps were filled. Price met and traded through, like you can see this period here, it came back and filled in those gaps there. So normally to the upside, what I'm saying is we might see gaps that are never filled, and that is just more fuel to the fire to the upside, which of course is that FOMO, which then is fueling more upside for BTC. Now, before I get to Bitcoin and our weekly counts here as Bitcoin continues to nudge away at 31,000, a quick look at what's happening with the NASDAQ as we have gaps forming on the NASDAQ as well. Of course, the AI hype is there. Everyone's going ballistic about NVIDIA, and Apple's hitting new fresh highs as well. So these markets have really been showing you the strength, at least since that March low. And we were very, very vocal on the channel and on Twitter about that low being extremely significant to the market because of the heightened fear, yet the price was higher than the previous lows. That is a clear signal. If you take nothing else from anything you hear on my channel, take that one. That is a clean signal for buying up the dip in a macro bull market. That is something that I learned from Gann, and that's basically what all of our members learn as well. That is in the top of the video description. Study the past to forecast the future. TIA Premium. That is all of our trading courses that we look at when it comes to trading short term, trading long term, and of course there is a ton of information in there as well. So that was a beautiful entry point. You can see how cleanly the market has run away from that low. This happened exactly the same in the GFC. We had a higher low form in March of 2009 after, you guessed it, we had a low in October, a lower low in November, and then a higher low in March as well. Market ran away from that point. Everyone was still calling bear market and a further collapse. Again, same sort of thing happened, exactly the same, in 2002 and 2003. You have a low in October. You had a previous low in July, August. So this time around we had it in June, and you had the low in October, then you had the higher low in March. You had a little one here in February, and then again in March, almost to the exact date. And then what happened? Market ran away from that point and continued up. I mean, it just keeps happening time and time again, yet people are waiting for this big collapse. It's not going to happen. Eventually we will get it, which is where this comment comes in, which is actually really, really nice. So thank you, Callum, for dropping this down here. And so this is going to apply for the coming collapse. All of this stuff, which is happening right now, this FOMO is going to get more wild, more volatile. Markets will go to new all-time highs now. You can see it in the charts. And it is going to fuel a mega collapse after this point. So I've said many times that the markets will crash severely, but probably not for another roughly 2 or 3 years, maybe longer. This is a good point here. So the question came from Callum. Just want to get your thoughts on how just before 1929, Great Depression, markets were at all-time high before they crashed and destroyed people's hopes and dreams. Do you think that's possible in this case? Yes, but we're not at those all-time high prices yet, and there were things that fueled the stock market in the 20s to go further than that peak that they were anticipating. So the land markets peaked around 1926, and then we obviously had some things to do with the gold standards. So great comment there. This is from yesterday's video. If you want to study it more, go back and check that out, because this is going to give you insights into the collapse that will come, but it's not coming in 2023 or 2024 or 2025. It will come possibly after 2026. All right, what else are we seeing that is showing these markets are going crazy, which is also helping the Bitcoin price here pushing to new fresh highs? I'm not saying we're not going to just pump all the way to 40K. Maybe we come back and test the high 20s again. But we're also seeing Europe. Europe just, as I talked about in yesterday's video, was testing these higher prices. Europe actually just touched a new fresh high price for guess how many days, guess how many weeks or months, all the way back to 2007. So 16 years, 5,600 days. This is just the beginning of this last stage of the cycle. You've got a lot of markets here that are just really getting going to test these higher prices. And then before you know it, it's all over. All of those folks who have been waiting on the sidelines get in too late. And this is why 90% of people miss out in the markets, why 90% of them lose money in the markets, because they are waiting and waiting and waiting until everything is comfortable, feels good. Their favorite analyst on YouTube or Twitter or the media or their friend or the smart person down the road or their friend that's in business tells them that things are looking safe. The majority of people are always wrong. And this is the reason why, because they just don't follow charts for a starter and they follow the news instead. It's just been, it's happened time and time again. And not to say that I'm the greatest at this, of course, not at all. I'm just trying to share what I have learned in the market so that most don't make this same mistake again. You can see here for the Euro stocks, so the top 50 stocks in Europe. Remember, 1 billion people over there. It is significant. Everything follows in a cycle. Things go up together and they generally all come down together as well in a macro sense, okay? So in terms of Europe, 3,800 points, you can see the market load in September, October of 2022, like most of the markets around the world. And then we had this higher low, which came back and broke through that 3,800 point level, which had been resistance all the way back to 2008, came back, used it as support, bounced away. And then we just start to move this line up to next previous support and resistance levels. We get closer in here, so around 4,000 points. Support, 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 the breakdown, resistance, resistance, breakout on a gap, came back, closed that gap, and bounced away from that point. So overall, we can get some further tests to the downside, but you're seeing higher lows getting put into the market, breaking previous massive resistance levels, and eventually it's just a matter of time. I am on a weekly chart here. It's a matter of time before we get that breakout, and the FOMO really does start to kick in, which, of course, at the end of cycles, fuels mega collapses. There's your FOMO and FOMO. More FOMO, mega collapse. Market starts off slow, we grind and grind, and then you get the FOMOs towards the end. They've all missed out, market collapses. We're getting set up again. You can see the pattern here forming. And if we get to that point, watch out for some of these high prices. We'll continue to follow up with those prices as well. So on to BTC. There's obviously more happening in the stock markets than Bitcoin. Bitcoin's done almost bugger all over the last 2 days because it's been the weekend, but now we're starting to see it test some of those higher prices. The main thing here is we need to remain on the right side of the market, trade with the trend. The trend is up. I've just spent a good part of 10 or 15 minutes explaining how bullish these markets are, yet the masses keep missing out on it. I've gone through that on the channel, plenty of receipts showing you the bottoms and why and how that's happened as well. That's the S&P, that's the NASDAQ. This is where the most money is in the world. Here is Europe. Look at all those bottoms, higher lows, higher lows, higher lows. Do we get it? Do we see it? There's a lot of strength out there in the markets, but the media is telling us the opposite. And the masses of these analysts are all obviously buying into that as well. They call themselves technical analysts. I don't know anything technical that they're actually doing. I think they're just buying into the fear. So we had our 1 week up. We're looking at the possibility of at least 3 weeks, possibly, I don't want to say probably, but possibly 4 weeks to the upside, because that's the minimum amount of weeks that we have seen in these rallies, just in case this is a bear market rally. But anyway, obviously don't think that. And we have now almost, we're a few dollars off that. You can see the first week up was at 31,395, and we're now sitting at 31,381 as I film this video. So we get another few bucks to the upside. That is going to give us our 1 to 3 weeks. So we need to see for the bulls a break out of this 31K zone, hopefully even above that 32K zone, and a nice test of this $34,500. So I got the $34,500. It's basically the all-time high. divided by 2, that's your halfway point. So $34,500. So the price all the way back to zero. So right through there. And you can see how well it's lined up. We've got some nice support. We've got previous area through here, a little bit of resistance on a daily, and then the support before the breakdown for BTC. You can see the breakdown here in, the support in January, and then the breakdown in May. That now will potentially become resistance. So we definitely want to see Bitcoin get to that point, hold around these levels, and then break above that. Once we get that break above that $34,500, things are massive go time for Bitcoin. Not in the sense that this thing is going to blow to $70,000 or $90,000, but it's going to be that time where more people start to switch to that bullish feel, even though they're still going to feel bearish, because then they're going to move their targets higher up. They're going to move their targets to 48,000, and they're going to move their targets to 52,000. Once Bitcoin hits this price, then maybe we'll consider flipping. It's going to be too late by that point. Bitcoin would have already been up about 200%. It's already up 100% now. By the time it gets to 45, 48, it's going to be up 200%. So they missed out on the bulk of the gains, waiting and waiting for more and more confirmation. Where are we at now? July. Well, we're coming up to July 4th here for the Independence Day for the US, which reminds me about the sale for TradingView. There's 50% off here for the premium membership, so $360 for the year. I think most people will probably do well with Pro Plus, so $230 for the year, because it gives you multiple indicators, charts, and active price alerts. I prefer Premium because I use more price alerts and more indicators there, but most people are going to do reasonably well using Pro or Pro Plus. So you get a pretty good discount. It's only for the next 6 or so days. Link to this is in the video description. Use it, don't use it. I just hate the ads that pop up on TradingView. So, I'd at least get that one there to get rid of those pesky ads. All right, so back to BTC, 3 weeks up here, potentially the end of this week, which will come in about 5-6 days. That's going to give us a few more answers. And then if we do happen to extend out to the 4-week period here, or even the 5-week period, which is going to be later in July, mid to late July, then that is going to give us a little more time to this upside, and is going to repeat the previous move to the upside for BTC, so the previous time frame to the upside. So we want to get some measures. We want to see BTC do a good move here to about $36,000. Doesn't mean it has to stay above that and close and whatnot. It just needs to get to at least 36 to repeat the same price range here. Of course, we want to see these things extend, the price go further, ideally around $42,000, because that gives us our 50% of the cycle low to the cycle top divided by 50. Take it off log, you can see that it's right in the middle there at 50%. But nonetheless, even a move to around that mid 30s, 36K is going to be a nice balanced move to the upside for the bulls. Any sort of pullbacks, they're going to be another reasonable buying opportunities, but it's not going to be anything like what we got back there, and I don't see us coming back to give us any of those sort of opportunities underneath $25,000 once again. Hit that like and subscribe button. I want to leave you with this tweet here. The markets have been pumping. All of the doubters from this year are now silent. They'll obviously come back if the market drops 1% or 2%. The poor macro bears will eventually flip bullish all too late, and the cycles will repeat. This is how 90% of traders and investors always lose in the markets. Don't be part of that 90%. Put some plans in place that gets you out of that 90%, and it can be super, super simple. Hopefully I've been able to show you something here on the channel that allows you to make a simple plan, get into the markets early, keep it easy, stay with spot if you don't feel like trading, and just follow the markets regularly. If you want to make this a full-time profession, obviously there's TI Premium down below, but even just sticking with something longer term is going to set you in front of the majority of people, including those analysts who've been in the game for decades. Most miss this, and you can see them missing it in real time with the receipts on the channel every single day, going through the S&P and how the masses have missed the bottom, and they continue to miss the move to the upside across all markets around the world, and of course BTC. Thanks once again, guys. Like and subscribe. I'll see you back here for another update. Until then, take care and peace out.